All right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. Let's jump into this chart and see what Rocket Companies has for us in this chart. So, Rocket Companies for some time, bearish run, hitting the highs of $34 and some change, falling all the way down to close to $19.40, 35 cents. And then I've also stated down here at 1830, 1835 being the lowest point, that if that gets crossed, they would start to see newer lows. And obviously the lowest that it's reached since this bearish run and all this volatility that we're seeing in the last month and a half is $19.40, 35 cents. So it has recovered since. The realtor.com news was great partnership news that we heard. As investors, many bulls jumped in. They rode up. It went in sideways direction, and it actually broke through the 50-day moving average, reaching highs here of about $24.23. It rode up, and it started to fall today. So some profit taking is taking place every time this runs. We saw that here, right? We saw that here recently, and we have just seen that here again. Now, it went in a sideways direction. The question is, will this actually go in a sideways direction again? So, will it continue that same pattern? Okay, some profit taking, and now it kind of jumps up and it goes in a sideways direction. Obviously, hopefully at some point reaching a point higher than when it was before, even though it goes in a sideways direction. Now we saw that profit taking quickly happening, run up again, profit taking, and the question again, is it going to do the same effect, sideways movement, and then jump up to a newer high after the sideways movement is done for a couple of days and the volume is just hanging out, and then more investors are attracted and encouraged to go ahead and invest. So Rocket Companies is in an upward trend as of right now, since this recovery of being way down here at 19.90 cents before the run, and obviously that recovery since $19.35 to 40 cents, way down there, hitting that lowest point in the bearish run since the beginning of September all the way till now in October. Now, the volatility here is immense, and the question is, where is Rocket Companies heading, and what does Rocket Companies need to cross to work its way up, and what is going to be an important support level to know if this is heading down? So let's go ahead and move this to its most important resistance level in the last couple of hours of the day, and its most important support level, which is actually the lowest point in the bearish run as this was falling earlier in the day. So let's look at that point, and let's look at this point. So right now it is at 22.79. Super important number is the highest point in this peak at 24.21. That is something to write down and keep in mind. That needs to be broken through so this can start to hit newer highs and newer resistance levels. And the 50-day moving average is super important right now, because that is going to be the most important thing to pay close attention to in this tug of war, and what is going to happen for the beginning of next week and the week throughout the week, actually, and the week as it goes out and rolls out. So 22.69 is the 50-day moving average. Super important number. We're super close to it. The tug of war is going to be immense. We're going to see who starts to gain control over the chart. Are the bears taking over? Are the bulls taking over? And as of right now, for Rocket Companies, it is slightly above bullish territory at 22.79. But 10 cents below that, 22.69 is our 50-day moving average. The moment that's get crossed in a downward direction, we are in bearish territory. So for the bulls to maintain momentum and stay above the 50-day moving average, they need to cross 23.07, turn that into a support, and start to work their way up to newer highs and newer resistance levels, breaking away from the 50-day moving average in an upward direction. So I want to emphasize this, that the bulls need to break through 23.07 so that this can maintain itself above the 50-day moving average. Super important for the bulls, and I want every investor to be aware of this, that 2307 needs to be broken through so this can start to work its way up, create a momentum, and get further away from the 50-day moving average into bullish territory and hitting newer highs and newer resistance levels. On the other side of the spectrum, we have what the bears want. This is the lowest point reached in the day, and honestly, if this gets broken through, the bears have accomplished two things. They broke through the 50-day moving average, getting into bearish territory, and they broke through the support level that is the most important one for them to hit newer lows and get deeper into bearish territory, and confirming they've gained control. This support level is 2262. I'd write that down. Super important number. I want to emphasize to all investors, pay very close attention to how this stock is reacting if support gets broken through, because now you're in bearish territory after the 50-day moving average got broken through at 2269, and 7 cents away from that is the support level of 2262, and this could start to get further away from the 50-day moving average in a downward direction if the bears take over and start moving this one down fairly quickly. So that's the behavior you want to look for. And yes, if the bulls reappear, there could be a chance that they break back through it and get back into bullish territory. And obviously they're going to focus on their goal of breaking through resistance. But until the bulls break through the 50-day moving average, they have not recovered anything. So that's why this is so important to pay close attention to the behavior of how quickly this hit newer lows, how deep did it go into bearish territory, and were the bulls even trying to reappear, and did they even get a chance to cross the 50-day moving average throughout the day to get back into bullish territory, or did this slightly kind of hang out below it and the bears are taking over the chart? So at 2262, I'd pay very close attention to how the stock is behaving. Put your 1 minute, put your 5 minute, put your 15-minute chart, and see the inflow and outflow of what's going on with the chart and how quickly this is testing newer lows and newer support levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and The next one was on September 22nd. And here we are on the 21st, after falling from that last pump. The market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.